Home builder Lennar just out with results. 74 cents a share was a penny below expectations. Revenue also coming in below analyst forecasts. Are now down about 2% pre-market. There are quite a few other comments to talk about here. Yeah, revenue was $3.87 billion, and that was quite a bit below where the street was indicated. Let me just give you a couple of these other metrics. They delivered 8,820 homes, which was up 30%. New orders up 24%. However, the backlog was down 2%. And they got a gross margin number, 20.1%. Well positioned to produce strong results throughout 2019. The basic, according to the company, basic underlying housing market fundamentals of low unemployment, higher wages, low inventory levels all remains favorable for Lennar, which, as you can see, has had an okay week. I don't know how the longer-term chart is obviously doesn't look nearly as positive as that short-term chart, but it's not absolutely horrific yet. I think some of the other home builders look a little bit worse. But anyway, we will be following this. It's gotten more relevant, I guess, to our macro viewpoints on the economy, given what we've seen in housing and just the 10-year down at. And once again, it indicates maybe worries of a slowdown, but it also indicates maybe mortgage rates come back down.
Well, that's what I was thinking. Everybody thought if you hadn't refinanced or bought a home at that point, if you hadn't locked in a rate, it was gone and gone forever. Right. Here we are.
But remember, when rates are going up, people say that spurs mortgage activity too, right, because you need to do it while you can.
But it's a similar theme in the KB Homes number last night, although their margin was pretty good, and you saw the stock do better than Lennar this morning. I mean, the key thing will be moving forward, whether this fall in yields leads to a pickup. These, of course, backward-looking results which don't factor in the recent slide in yields.
It's probably the argument, as we were having yesterday, that there are so many other issues in terms of affordability. Home prices got expensive, and then the taxes, particularly in the SALT states, when you can no longer deduct some of those local real estate taxes.
Absolutely, absolutely. But I think the commentary's key as well, coming, which we'll get later from them. But KB, I think we just showed it there, was up 2.4%.
Well, in fact, I'm going to talk about and you're like stepping all over my next story, which was on KB Homes, but it's okay.
Says the guy who always sticks to the teleprompter.
KB Homes swung to a profit. You can make sure I say this right, Wilf. You did this on closing bell.
Yes.
KB, great work. KB Homes swung to a profit in the first quarter. Revenue fell, though, as sales in Southern California were hurt by a lower demand from foreign buyers. Did you say that last night?
I didn't, because as it was breaking, that wasn't the first thing I managed to pick up on.
All right. Well, I'm telling you now. And at least someone told me, and I'm telling you. But the company says conditions started to improve in January and February, expects higher selling prices this quarter. Here to talk more about Lennar's numbers, Wilfred. No, we got somebody else. Ken Leon. He is equity analyst at CFRA Research, joins us on the Squawk Newsline. Stock's down a little bit on this, and actually the futures are getting worse in the Dow. But was there any surprises for what at first glance for you, Ken?
So for Lennar, the micro performances year over year, they had the Cal Atlantic acquisition, so it's apples and oranges. So nothing significant really in year-over-year comparisons. The key really is the velocity of increasing new communities, and also the net order contracts is the key metric. For Lennar, the key there will be whether the second half of this year will show momentum. Pace is important because the demand is at the low end or starter homes versus the move-up or luxury. So you need to sell more units. KB Homes, it's exactly that issue. What I think sets the two apart is that KB Homes has a faster pace of new communities. So even though they had a 15% increase in total average communities, still their net orders were down low double-digit year over year, but sequential. So the bull case is sequential things. There's an eternal hope with the spring selling season. Year over year, the macro from the government and industry is still kind of weak. So you got to make the bet on quarter to quarter things get better.
Okay, just reading, we're constantly trying to figure out the bigger picture, Ken. And if you were to, where the company says basic underlying housing market fundamentals, low unemployment, higher wages, do you think we could take out housing market and just say that, can we still say that even with the 10-year breaking under 2.4, that fundamentals of low unemployment and higher wages are still something that is a positive? Or where is the real angst coming from, in your view, for the yield curve right now?
It's a great question, and Lennar has used that statement as a boilerplate over the last few quarters. We look at really home builder sentiment. We looked over 33 years and published that we're near a record level, and it's going to be hard to sustain that if it's a predictor of what the housing market could be in the second half of this year. So we're more bearish. Also, Case-Shiller is down 4.2% price increase. It helps affordability, but not a lot. Still with mortgage rates above 4.2%, it's not going to be a major swing in terms of demand. I think the thesis here is better for home improvement retailers than it is for home builders as we look at 2019.